Is the second largest player in AI about to pull off the biggest IPO in history? Reports have leaked that Anthropic is eyeing a valuation of more than $300 billion and a public listing as early as 2026. While everyone is watching OpenAI, Anthropic may be quietly racing toward the public markets. I'll break down the news, numbers, and timeline, and whether this deal will be a generational opportunity or a peak AI bubble. In IPO Radar news, the Wealthfront and Medline IPOs will close out 2025. Revolut is a $75 billion company, and Verkada is watching you. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs. We got a bombshell news story this week out of the Financial Times that Anthropic has hired a law firm and is pushing toward an IPO as early as 2026. And this is a big news story for a lot of reasons. First of all, for the size of this company, Anthropic is now considered a $300+ billion company. And by the time it IPOs, the rate it's growing, it could easily be a $500 billion company, maybe as much as $1 trillion. A few weeks ago, we talked about OpenAI and how the story leaked that OpenAI was starting to push toward an IPO. They walked that back a little bit. The CFO sort of denied it. And these were all from internal sources. And the story is different because Anthropic has hired a law firm, and somehow that story leaked to the press that Anthropic was pushing toward an IPO. This law firm is called Wilson Sonsini, and it has worked on some of the biggest IPOs that have come out of Silicon Valley, including Google and Lyft and LinkedIn. And another piece of this is that the startup led by Chief Executive Dario Amodei has also discussed a potential IPO with investment banks, according to multiple people with knowledge of those talks. People characterize the discussions as preliminary and informal, suggesting that the company was not close to picking its IPO underwriters. They have discussions with these banks all the time. If you're a $300 billion company, you're talking to the Goldman Sachs and the Morgan Stanleys. So no surprise there that he's having these conversations. I would think that the IPO is coming up in these conversations because of the size of this company and the growth trajectory. They should want to IPO in that growth trajectory. From what we can tell, this company has grown from about $1 billion last year in 2024 to almost $10 billion in recurring annual revenue by the end of this year. So that's a 10x revenue growth in 1 year, which is extraordinary. And it also says in this article it could come as early as 2026, although it contradicts itself here, saying another person close to the company cautioned that an IPO so soon was unlikely. So it looks like FT reached out to Anthropic and they responded, which is better than a lot of companies give. Most of the time, companies are going to say, hey, we can't talk about this, or we're not going to talk about rumors. They got a statement from an Anthropic spokesperson. It says, it's fairly standard practice for companies operating at our scale and revenue level to effectively operate as if they are publicly traded companies. We haven't made any decisions about when or even whether to go public, and I don't have any news to share at this time. No surprise that that's the kind of response we get from this story, but it's a very positive sign that they responded. Another interesting part of this article is just the title. Anthropic taps IPO lawyers as it races OpenAI to go public. So they're sort of framing this race that no one really thinks is happening. OpenAI has said maybe they're going to IPO or as early as 2026, and they walked that back and said 2027 is more likely. But then again, they also kind of said, well, we may not IPO. Anthropic saying the same thing. Maybe 2026, probably not 2026, and probably 27, but we haven't really decided yet. So I think framing this as a race is a bit of a stretch. Now, conceptually, it makes sense that this would be a race because the first of these two companies that gets out into the public is probably going to be able to raise more money. Sometimes companies want to wait to see what the other company does before they IPO so they can sort of feed off that and get a valuation. I think in this case, the growth is so wild, the scale is so big, and there's all this money flow between these various Mag 7 companies and then OpenAI and Anthropic. I really think that the first one out is going to set the tone and raise a lot of money and be able to raise billions and billions of dollars. The OpenAI IPO, they were saying it could be up to $60 billion or more in a fundraise. And we know that these companies, the way they're growing, they need more cash. The numbers just don't work. Anthropic, if they go first, maybe they'll be the ones that raise that $60 billion, and then the second one may not have as much of a chance. So I think it's interesting they're framing this as a race, even though there are really no signs that this is a race. I would love to see either of these companies go public, but a lot needs to happen between now and those events, and there's certainly no guarantee that these valuations are going to hold or that these business models hold. Is very competitive out there in the economy or the public markets. How would any turmoil there affect these private valuations and the trajectory of these AI businesses. If you don't know the company, they have Claude, which is essentially the same thing as ChatGPT, but Anthropic is marketing Claude toward more enterprise customers, and it's known to be better at coding than OpenAI or Gemini. So Cursor and these other vibe coders are using Anthropic to write computer code. You can log on and get a free account. I've got one and just started using it recently, and it is fairly user-friendly, but it essentially does the same job as OpenAI or Gemini or Grok. There's an article in Fortune this week, December 2nd, that talks about how Anthropic is really more focused on safety versus OpenAI. OpenAI seems to have this renegade reputation that it's just doing whatever it can to grow and make partnerships and build a better product, where Anthropic is all in on safety. And Google, don't be evil. We're not sure what Google Gemini really has in mind. They're looking to just sort of replace search with an everything model. So we've seen Anthropic try to position themselves as a safer alternative or a safety first, which is similar to Safe Superintelligence. It's another company that was founded. A guy left OpenAI, founded Safe Superintelligence. That's a several billion-dollar company now, even though it doesn't have any revenue. Safety may be the thought framework or the positioning that this company may be using to be in good favor with the government. If the government administration changes over, or if the SEC is starting to worry about safety, or the government maybe framing their product as safer than, say, an OpenAI, is one way to gain some favor with regulators. But when you're growing at 10x per year, 1,000% this year, people aren't asking a lot of questions. People just want to be a part of what you're doing. That would lead us to the IPO. So I'm sharing my screen now, and we're looking at Caplight to get a sense of where this company has come and gone. Anthropic raised a Series A back in May of 2021 at a post-money valuation of just $550 million. The Series B came in a year later at $4 billion in 2022, April 2022. And it has since grown to a valuation of $350 billion. Now, the latest Series F happened just in September, and that closed at $183 billion, but we've gotten some reports that it's now raising money at a $350 billion valuation, bringing on more investments from Microsoft and NVIDIA, who are kind of getting their hands in all of these companies. We've talked about the circularity of a lot of these relationships, that NVIDIA is investing here and vice versa. And this investment by Microsoft and NVIDIA just shows more of the circularity that's happening. But if these AIs are going to grow, they need that processing power. So they need chips, and they need data centers, and they need cloud, and they need energy. And without it, they're just not going to continue to grow. Anthropic's been on a bit of a PR campaign as well. CEO Dario Amodei was on 60 Minutes November 16th. It's hard to know if they're doing that as a PR campaign for the government or for investors or for consumers of their product, or if they're starting to lay the groundwork for an IPO. Now, we've talked a lot about AI bubbles and hype. Anthropic has come out and said they expect to have $70 billion in revenue by 2028. That's annualized recurring revenue. By the end of this year, 2025, they're expecting $10 billion of annualized recurring revenue. And so that is a 7x prediction between now and 2028, just 3 years. At $10 billion of annual recurring revenue at a $350 billion valuation, which is what they're saying right now. Multiply that by 7, assuming what they say is correct and that they're going to be doing $70 billion in annual revenue in 2028. That takes us to about a $2.5 trillion company in 2028. If they can IPO this thing at $500 billion, maybe there is an opportunity for retail investors to participate in this long-term growth. A lot needs to happen between now and 2028, and there's going to be a lot of skepticism that they can actually deliver on that. There needs to be the data centers and the chips within those data centers. There needs to be the energy to power the data centers. There has to be customer demand, be it corporate or individual or global demand, API demand. $70 billion in annual recurring revenue, 2028 is certainly a rosy, ambitious number, but a lot of people think it's possible. We're just at the beginning of this AI growth period. So yeah, if Anthropic could IPO in 2026 or 2027, that'd be a great opportunity for retail investors. However, things could slow. This is a competitive space, and while there's insatiable demand for AI processing and usage, read what the skeptics are saying out there. We may be in a bubble, or we may be in a bubble and still grow, right? It's easy to say we're in a bubble. It's very hard to know when a bubble is going to pop. And so this juggernaut could keep growing for several years before anything negative happens. As for the 2026 2027 IPO timeline. I'm highly skeptical that this IPO is going to happen in 2026. But if I could pick one of the top 5 or top 10 companies on my IPO wish list, Anthropic is certainly in there. The size of this IPO and this deal is going to get a lot of scrutiny from regulators. So I don't think that this company can get the deal done in 2026. It's going to have a lot of back and forth between the SEC. And for a deal this big, they're going to want to make sure to get it right and price it right and make sure that all the material is accurate in the S1. So I expect there to be a lot of regulator oversight on this one. And then the bankers, a lot of bankers involved, a lot of parties involved, accountants, lawyers. So it was a very big deal. I don't think it's likely it comes out in 2026. If it does, that means they really had their stuff in order and got it together. What I'd really love to hear is maybe a story in May or June that says Anthropic intends to IPO in Q1 2027 or Q2. Similar to what we saw from Kraken, they announced they're going to IPO in 2026, way back in March of 2025. So if we could see something like that with Anthropic, maybe talking about who they've hired as an underwriter and their intent to move forward, we would also get more financials if they were leading into the IPO like that. And we're getting plenty of numbers right now just from leaks and various reporting, but for them to come out and say, hey, we're at 15 billion annual recurring revenue, and we expect to be at 20 by the end of the year, or something along those lines, that'd be very helpful headed into the IPO. I'm certainly going to be following this deal because, first of all, it could be the largest IPO ever if the company keeps growing the way it is and demand is there for it. And I do think institutional and retail demand will be there for this IPO. I'd really love to see them offer IPO shares to their paying users or their customers. So we'll keep an eye out for a directed share program. I think significantly in our space, this would draw more smaller companies into the public markets. If a company like Anthropic went public or OpenAI, that might help to make IPOs great again. The SEC claims they want more companies to be IPOing. Maybe this would help if the public valuations are higher than the private valuations and there's demand out there and these companies keep growing. But several things could derail this if private valuations crash, if the business model turns out to not turn profitable. That story about the 70 billion in revenue by 2028, they also say they expect to have 17 billion in cash flow by 2028, meaning this is going to be a profitable company. And nobody's expecting OpenAI to be profitable by that point. It does seem like Anthropic is taking a more conservative route than OpenAI, holding back costs possibly because they want to have better numbers to show off when they file their S1. Public markets need to remain stable for this to work. We'd like to see NVIDIA continue to grow and Microsoft and Google, all those companies continue their trajectory, at least remain flat and the markets remain stable. That would help Anthropic get out the door in 2027. But if revenue slows or if this bubble that we're talking about or everyone thinks is out there does burst, then that could really throw a wrench in the Anthropic IPO potential. But I like to think that this company maybe sees that this is their opportunity now with this crazy growth and this crazy valuation, and they want to get out the door so they can raise as much money in the IPO. And then once they're public, then they have a lot more options for raising capital than they do when they're private. In private money, there just may not be enough to fund the ambitions that these OpenAIs and Anthropics have. There's just so much money these companies need to spend to feed these business models to eventually become profitable. One other note I forgot to mention earlier is that they hired a guy named Krishna Rao as CFO back in 2024, and this guy was instrumental in the Airbnb IPO. So just another little signal there that this company is moving forward. They have a very experienced person in that role, and that is the key role with the IPO. So we're going to keep an eye on him, make sure he stays there, and see if we get any quotes from him that might give us any more clues about this deal. Anthropic, hopefully a 2026, probably more likely a 2027 IPO. Could be the biggest ever. Maybe they're in a race with OpenAI, but if we get both of these IPOs out the door, I think that's a formula for reigniting IPOs. It would bring hundreds of more companies, high quality companies, profitable, large companies into the public markets. And that is what we all want to see. And those are the companies we want to invest in because they're not available to most retail investors in the private markets. More IPOs, better access to IPOs, better access to pre-IPO companies if we can, but the more public companies we can get into our 401ks and our index funds and IRAs, the more we can all benefit from these extraordinary and disruptive technologies like AI, like fusion energy, and quantum computing, these big technologies that are going to change the world over the next 2, 3, 4 decades. Retail investors want to be a part of that and want to profit from it. So get these companies into the public markets, let the market decide their valuations, and give retail investors a chance to participate in the growth of these extraordinary companies. Let's move on to IPO Radar news. 2025, with the government shutdown, we really thought it was going to be the end of IPOs. There was this little window where Navan went public after that 20-day wait period. Now that the government shutdown is over, the government has said that they're going to prioritize IPOs. It's looking like we're going to get 2 high-profile IPO Radar companies out the door before the Christmas holiday. The first one is Wealthfront. Wealthfront is known as one of the bigger robo-advisors up there with Betterment. Wealthfront filed for an IPO right before the government shutdown. It was sort of in limbo there for a while, but it is a profitable company and has a very happy user base, even though it's not a big brokerage company. It's nothing like a Robinhood or a Fidelity or a Vanguard, but it's looking like it's going to be worth somewhere around 2.5 to 3 billion in its debut, possibly more. Wealthfront set IPO terms on December 2nd, kicked off its IPO roadshow. So you can go to the SEC website right now and download the S1 filing, or you can go to my website, just type Wealthfront into the search icon in the top right of the website, and you can find the S1 there. Not a huge deal. It's offering about 34 million shares. About 2/3 of those are new shares, and then the rest are selling shareholders. So some investors are cashing out. Initial price range, $12 to $14 per share. The raise here is about $484 million, but some of that's going to the existing shareholders. So the proceeds out of this deal are going to be about $300 million, maybe to $350 million, depending on where the pricing lands. And as I said, it's about a $2.5 billion valuation. So not a huge company. And I think disappointingly, we're not seeing any evidence that Wealthfront customers are going to get a chance to invest in this IPO. That was what I was hoping for. I did a Wealthfront IPO preview episode. It was episode 31, if you want to check that one out. And I'm sure I mentioned about the directed share program, which wasn't in the filing, and the updated filing doesn't have it either. Usually when you do a directed share program, you partner with a broker that offers IPO access, say Fidelity or Robinhood or TradeStation, and then you deliver shares to those brokerage accounts, which means your customers have to open up a brokerage account with those companies, and Wealthfront doesn't want that. They're the competitors. So it's one of these situations where if they couldn't figure out how to deliver shares to customers, then I guess they're not going to do it. If you're a Wealthfront customer and you received access to this deal or you got an email about it, please let me know. I haven't heard anything yet, but sometimes readers will reach out and let me know about that. I haven't seen anything on social media. So disappointing if Wealthfront customers don't get access to this. I haven't seen access at any of the platforms that I follow for IPO access. So this Wealthfront IPO, maybe just one to watch on the sidelines. And certainly don't chase a hot IPO. If this thing comes out hot, don't chase those shares. Usually within about 6 months, you might get a chance to buy this one at a lower price if you're interested as a long-term investor. This is a profitable company with very satisfied customers, so it could be a long-term play if you invest in fintechs or brokers like this. But Wealthfront isn't going to be taking over Fidelity or Robinhood anytime soon. So small niche player, but happy to see the IPO coming out. The IPO date is Friday, December 12th. We'll be watching that one. Also upcoming, it looks like it's going to get out by the end of the year, is Medline. Medline was the focus company of episode 35, if you want to go take a look at that one. Medline would be the biggest IPO of 2025 after all that we've been through. It's expected to be about a $50 billion deal, raising about $5 billion. We got an article out of Bloomberg this week saying that Medline was very much considering updating its terms to its filing and starting the IPO roadshow on Monday next week. There's a lot of qualifiers in that story. They say they're going to start marketing or they're considering it, but there doesn't seem to be a reason not to move forward at this point. As long as the SEC is okay with the filing, we know it's been in there for a while, but with the government shutdown, things were paused. But it does look like Medline is going to get out the door if that reporting holds true by Bloomberg. We'll get an initial price range, we'll get an IPO date, and there's not much time left. So if this filing drops on December 8th, we can expect an IPO probably Wednesday the 17th, Thursday the 18th, or Friday the 19th. 2025 has been sort of rough on IPOs thanks to the overbearing government. The tariff announcement slowed things down in April. The government shutdown shut things down in October. So after all that, if we can get a $50 billion deal out the door, that would be a huge win for 2025 and I think set the stage pretty well going into 2026. As long as they price the deal at Medline fairly, at a $50 billion valuation, we should get a decent amount of retail retail access out there. So I'll be watching all the usual suspect brokerages to see which ones will be offering IPO access to customers. And if the pricing's right, I think a lot of us will be investing in that one. But I think we can hold our expectations back a little bit. It's a medical company and logistics company. Wall Street might be excited about it for the long term, but short term, we'll have to see. It really is going to depend on the pricing. So we'll be rooting for Medline to get out the door that last week, right before Christmas. Hopefully a positive debut rubs off a little bit into 2026. Just two more stories for you this week. Revolut is the first one. They announced that they completed a fundraising process establishing a $75 billion valuation. This is a British company. I thought it was interesting that they used dollars in this announcement. Transaction was led by Coatue, Green Oaks, Dragoneer, Fidelity, N Ventures, NVIDIA. And it looks like the main reason they did this was to provide liquidity for employees. And it says deepen partnerships with leading investors. Revolut is a fintech startup, neobank, everything app based in London. Its mission is to simplify all things money. And if there were ever a fintech darling out there right now, it is Revolut. I hear people gushing over this company. This one in Ramp, by the way. Ramp might be the other one. This company has a very strong brand. Its product velocity is very strong. It is a global brand. It's a banking company. It uses other banks, similar to what we see in the US. People don't get their banking charter. They partner with banks. And so it's more of a technology company than a bank, but you can do all your banking there. They've been trying to get some banking licenses in the UK and the US. I don't know what the status is on those right now. But this $75 billion valuation is a bit of a flex, I think, but a little bit disappointing to see that they're mostly doing this to tender shares for employees. They're following in the footsteps of SpaceX and Stripe, especially in offering liquidity to employees without an IPO. We'd really like to see this trend turn around. Hopefully Revolut is now at the point where it's going to start thinking about moving toward a public offering. And Revolut would likely be a US IPO. At least that's what the CEO has said in the past. So in May of 2023, Revolut co-founder and CEO told the Times of London that the company would never consider an IPO on the London Stock Exchange due to complex and unclear regulatory requirements. He stated, "It's hard to do business in the UK. The exchange is much less liquid, so I just don't see the point." Problem is, there's no evidence that they're actually moving toward an IPO. Yes, it's a $75 billion company. It's a global brand with an excellent product and large customer base. It's growing quickly and people want to invest, but there's little indication that it actually wants to IPO. There was a Wall Street Journal article back in March of 2025. Revolut sees UK banking license paving the way for potential IPO and expansion. This Wall Street Journal article, there was a curious line that said a 2026 IPO is widely expected by industry leaders according to media reports, though the company hasn't confirmed any firm plans. Wall Street Journal is a reputable source, but I did try to track down some facts to back up that statement. This, according to media reports, I couldn't find any media reports about that. So it could be just speculators like me or some media source I couldn't find. But at this stage, we don't see any indication that Revolut is moving toward an IPO, even though it may get its banking license and it may be the next $100 billion fintech, certainly one of Europe's largest private companies out there. People would love to see this one go public. And I am among those people. I would love to see this one go public. It's been one of my IPO wish list companies. It's the darling of Europe. It's a fintech darling. So let's get you out the door, Revolut. You're welcome to IPO in the United States. We've got 2 wonderful exchanges willing to accept you. So now that you've cleared out some liquidity for your employees, brought in some strategic investors like Fidelity as mentioned in that article, maybe now is the time to start thinking about the next steps to raise more money, but this time in the public markets, and give your customers a chance to invest in your growth. This press release by Revolut was full of information. It said Revolut's 2024 revenue grew 72% to $4 billion, with profit before tax increasing 149% to $1.4 billion. So $4 billion in revenue, $1.4 in before tax profit. Certainly sounds like it should be getting close to the point where it should IPO, but maybe they're out there thinking like Stripe that they don't want to go public due to the scrutiny and the headaches that come with it. You know, I think the benefits outweigh the negative aspects of being a public company. Of course, I'm biased, but we'd love to see this company on a U.S. exchange within the next year or two. Quick look at Caplight. It's actually showing as an $82 billion valuation right now, up from that $75 billion fundraise or tender offer. Just sharing my screen right now, the price has rocketed and there's no signs of it slowing down. One last radar story this week, and that's Verkada. Verkada, that name, by the way, means nothing. The founders have said that. Verkada, if you're not familiar with it, is an integrated cloud software and physical security systems startup based in San Mateo. Develops a multitude of enterprise-scale products and systems to secure office buildings, schools, government facilities, and industrial installations. Company's mission is to protect people and property with privacy in mind. Verkada makes security cameras and security software, and it does it with complete integration. The software platform is called Command, and it's a system that allows you to manage the security of an entire complex. So high-tech security, high-tech cloud software, and everything is integrated into one big tool. So they're selling hardware and they're selling software, and it's a relatively new company. It took its seed round in late 2017. So it's built on a modern tech stack. And we all know security cameras have been around a long time, but anytime there's an older legacy company, you know, their technology is dated and they struggle to modernize. And even if they're able to modernize camera or little pieces of software, it's really hard to integrate a legacy system with new technology. And so Verkada saw an opportunity. Was founded by 3 Stanford grads. Started as one of these Internet of Things companies. Remember, we used to talk about Internet of Things, but it moved on from that and is now visual security and security integration. Anyways, it's an interesting company that I haven't mentioned on the show yet, but I've been following it for well over a year. The story that came out, security startup Verkada hits $5.8 billion valuation in the latest funding round, led by Capital G. Capital G is a venture arm of Alphabet, Google. This was a CNBC story. It says the investment comes as Verkada surpasses $1 billion in annualized bookings. It says here, I think Google saw an opportunity with us in the application of AI and everything we're driving to apply AI to the physical security industry, said CEO Philip Calazan. Says the money raised from Capital G will be used to bolster its artificial intelligence capabilities and provide liquidity, presumably to other investors or employees. Financing totaled $100 million, a person said, raising the company's valuation by $1.3 billion from its Series E funding round just in February. Over at Caplight, I'm taking a look here. Series E happened February 18th of 2025 at a $4.5 billion. They raised $200 million. This round is $5.8 billion valuation. They raised $100 million. So with that $1 billion in annualized bookings, it has 30,000 customers globally. So I liked this company when I first learned about it because, first of all, it had a distinguishable name, even though Verkada means nothing. Anecdotally, I was golfing with a friend of mine, and he had a coffee mug that said Verkada on it. This is after I had written about the company and I asked him about it. My friend works in cybersecurity, and he said he needed to go look for a camera system for a client. And when he went into the market looking for a product, he said Verkada just blew everyone away. So he had his client buy the Verkada products and the software. So it was just very easy to set up. He's not a security camera guy. He's more of a computer security guy. But when he had to integrate this system into office security, he said it was a breeze. It was very easy to use. So very anecdotal little note there about my friend who's worked with this product. Everything we're seeing with Verkada, the growth trajectory, the pedigree of the founders, Stanford founders, they're based in San Mateo. They have very high-profile investors, including Alphabet and General Catalyst and Lightspeed and Sequoia and Merck and Michael Dell. This is a company that we would expect to see IPOing within the next, I'd say 3 or so years maybe, at almost a $6 billion valuation, growing steadily, integrating AI and building out its business model. At some point, a company like this would hopefully go public, or it could easily get acquired by either one of the legacy companies or even someone like Google. Imagine Google getting their hands on the software or all the data coming out of these security cameras around the world and running some AI magic on it, or turning that into some sort of product or feature within their AI research ecosystem. Seems like a lot of valuable data there. So it could be an acquisition candidate. I'd certainly prefer to see Verkada IPO someday. But at this stage, Series F, which is pretty late in the game, almost a $6 billion valuation, just raised $100 million, which is down from the last 2 rounds in terms of how much they raised. So maybe they don't need as much cash here, and they're getting to the point where they're almost profitable. So keep an eye on this company, Verkada. Could be a bridge between the physical world and the AI world with these cameras and software. Very interesting company coming out of San Mateo, California. That's all for the show this week. Don't forget to subscribe to my YouTube channel. Like, follow wherever you consume your podcast, if it's on Spotify or elsewhere. Like, follow, do whatever it takes to get these episodes into your feed. You can also head to accessipos.com and sign up for my weekly newsletter. You get a free download that outlines the IPO process from startup to public company. So it's a great little one-pager PDF that you can download and take a look at. And you get that for free for signing up to my email list. For those of you who want to up your game, especially headed into 2026 when we're expecting some very, very high volume for IPOs, join the Access Club. This is our Patreon membership group. This is where I provide bonus content and deeper dive information about upcoming IPOs, pre-IPO investment opportunities. And it's a community where you can chat with other people about upcoming IPOs, how they're investing in the IPOs, or even how they're investing in pre-IPO companies. There's a new feature on my Patreon. Instead of paying month by month, you can pay once a year and you get a really good discount, 15%. So if you pay annually, save yourself 15%. So head over to patreon.com/accessipos to sign up. Get a 7-day free trial as well. And when you get in there, I'll send you a little message and you can ask me anything. It's a free-for-all. So just send me a message, whatever's on your mind, or wait for me to send a message to you and respond. Whatever's on your mind, I'd love to answer your questions. So join us, sign up. You'll get actionable insights, communicate directly with me and like-minded investors. Thanks for listening. Thanks for watching, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.